Alright, so the next candlestick pattern we're going to look at is called the bullish engulfing pattern, and this is said to be one of the stronger candlestick patterns, so it should be an interesting one to test. This is a 2-candle pattern that is supposed to predict a bullish continuation or reversal. So to be a bullish engulfing pattern, the first candle should be a small black down candle, the second candle should open lower than the first candle's close, and then close higher than the first candle's open. And that's how we've described it in the Hammer Broker code. So this basically results in a small black candle which is then completely eclipsed or engulfed by a much larger white candle. And in some cases, the first candle can even be a doji. So this suggests that any downward momentum is finally over and that the bulls have completely overpowered the bears. So it's a very bullish signal. And here's an example of a bullish engulfing pattern on the chart of Allstate Corp. You can see that the second candle fully engulfs the first black candle, and that momentum then continues on for several days afterwards. So using our formula and running the bullish engulfing pattern on the data produced some modest results. Buying the market on the close of a bullish engulfing pattern and exiting the trade one day later produced an average profit of 0.03% per trade and a win rate of 51% over our selection of 21 markets. And here the best performing symbol was sugar. On stocks, the average profit was slightly more at 0.09% and the win rate was 50%. With a 3-day holding period, the results were also fairly modest, with an average gain of 0.07% on our 21 markets, with a win rate of 53%. Results did not improve much with a 5-day holding period, but they do look better with a slightly longer holding period of 10 days. With a 10-day holding period, the bullish engulfing pattern led to an average gain of 0.16% in our selection of 21 markets, with a win rate of 54%. And in stocks, the average gain per trade was 0.35%, with a win rate of 54%. This result was only slightly better than the benchmark 10-day return across all S&P 100 stocks. Overall, these results are not particularly consistent or encouraging. One good thing you can say about this pattern is that it does result in a lot of signals, and that makes these numbers more significant. However, it's not clear that this pattern has any real edge. So next up, we'll look at the bearish engulfing pattern.